Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today I am absolutely delighted to introduce you to DeQuantifi, and we have Soheel and Fred here. How are you guys?
Well,
Good.
Toby.
Yeah, very good.
Listen, we've been finding out a little bit more about the company. I'm really excited about this because I think not only is it a really interesting area, but it's also a really interesting time of your development, sort of starting in earnest sort of December time and seeing the sort of evolution of the business. Loads and loads to find out about all that. Before we go into it all, let's find out a little bit more about your backgrounds. Fred, tell us a little bit about yourself first and foremost.
Yeah, sure. Well, I've spent many years working in traditional finance for different banks in the city, also in New York, Paris, London, and this is working in derivatives markets for traditional products, like FX, commodities, interest rates, and so I did that for many years, and then took a bit of time out, with COVID, and have a bit of a think about things, and then we thought, it'd be nice to do something again, something interesting. And I remember how much fun it was working in derivatives when I was, more at the beginning of my career. It's a voyage of discovery, lots of very smart, motivated people. So crypto derivatives sounds perfect for me to get back into that world with the energy and the buzz of a new market that's growing. And
It's seduced a lot of people back, hasn't it?
I think it has, yeah. Quite a few old names popping up here and there. Yes,
it certainly is. We'll come back onto that in a second because I've got a lot of questions around that too. So he'll give us a little bit of your background as well.
So, like Fred, I too have a background in traditional financial markets, mostly for the big investment banks in London. And I've worked in electronic trading. I've worked a lot on risk, derivatives risk. And just like Fred, I felt the big banks are falling a bit behind in terms of tech, and I wanted to play with the latest tech and be able to solve problems using some of the newer technologies such as AI. And Fred and I had worked on a startup before DeQuantifi, which is in a completely different field, which is social media, called Locketbox. And we wanted to apply some of the things that we learned to the finance sphere.
Sounds like a great transition in terms of everything that you were doing and where you've been heading with it. So that lands us at the sort of doorstep of DeQuantifi. So tell us a little bit about it. What's the company do? Where's the opportunity, and how do you fit into it all?
So what we feel is there is a gap in the market around trading tools for institutions with crypto. So crypto, just to explain, crypto is mainly a retail-driven market at the moment. And when we've looked at the tools in crypto, they are not the same. They don't have the same level of sophistication as the tools that we built throughout our careers. And really, we think there's a gap there. And so our company is really about providing quantitative trading tools to risk takers in crypto, particularly in derivative markets.
And as you said before, that's where I feel like a lot of people have come back to from those institutional backgrounds. What has been some of the sort of real drive for people to come back into that space? What's this? We mentioned the word seduction earlier on. What's seduced people back into this space?
I think that since 2008, I think traditional markets, it's been hard to be entrepreneurial and to make money in those markets. And I was a head of RegTech until a few years ago at a large bank. And I can see that the regulations mean that it's becoming increasingly difficult to find opportunities to make money in traditional markets. And plus a lot of the work, if you're a technologist, is about enhancing systems rather than building new things and adding a lot of value to the trading floor. That's why I think people from the trading floor and from tech, a lot of those people have moved into crypto to get back this feel that Fred referred to of doing something new.
And it is, isn't it? It has that sort of piece to it, but it's also still, as we will speak about, I'm sure, during the course of this, a sort of volatile market. And with that volatility creates opportunity and technology and as you say, companies there that are allowing people to play at their optimum and play at their best and de-risk this sort of area. So talk to me a little bit about the benefits of your product. talk to us a little bit about how your customers engage with who your customers are and what's exciting for them about what you're doing.
Okay, so our flagship product is called DQ Risk, and that's been released recently in a trial phase. What DQ Risk does is it takes positions from different crypto exchanges, and particularly derivative exchanges, aggregates those positions, and then you can see real-time risk on those positions, and plus you can see your P&L, and we've got P&L Explain in there, which are fairly standard tools for TradFi, but apparently there aren't tools like this that exist in crypto markets. So to explain, but I think the users of these products at the moment, the users of crypto products at the moment, will probably manage the risk and they'll have built spreadsheets to manage all of this. So why would they want to use DQ Risk? I think it's really around growing up and maturing, and about reducing operational risk is probably the key thing. Because we're a system, we're locked down, we run a SaaS model as well. So our clients don't need their own IT infrastructure and the staff associated with that. We can get them up and running in minutes. I think those are the key elements.
And that sort of ties itself back, doesn't it, to the sort of more traditional markets and what we've seen in evolution through there as well. The amount of times I've heard people trying to get people away from their spreadsheets over the years has been that's not new conversation for traditional markets, but I think it is, isn't it, in terms of probably the more retail orientated world of crypto thus far. And as it matures, I wrote about this on the weekend on LinkedIn, I don't think crypto as an asset class is going anywhere, right? Despite all the volatility of everything we're seeing, it has arrived as an asset class, and with that as its moniker, so too comes an awful lot of significance around, I guess, the levels of traditional structure that's needed around those sort of areas. And as you sort of noted there, the spreadsheets, depth, and how people can become more efficient has driven huge innovation and huge development in the in traditional markets. Fred, talk to me about what you've seen in terms of innovation at the moment, and how you guys sort of fit into that ecosystem.
Well, I mean, the crypto world is kind of full of innovation. So, I mean, one way to think of it is, kind of like innovation of crypto that's different to the innovation in traditional derivatives markets. Because, I mean, when you think about the traditional derivatives markets, it's like conquering one asset class after another. As time has gone on, derivatives have moved in, taken over various asset classes. I mean, there's no reason to not suspect that derivatives will come in and take over crypto as well, so that the volumes of derivatives will far outstrip the volumes of the underlying coins, the spot products, if you like. Because that's certainly the pattern that's happened everywhere else previously.
Yeah, it's interesting, that, isn't it?
Yeah. And the other thing in crypto also is this DeFi aspect, which is not quite what you would see in traditional markets, because traditional markets tend to be that centralized, right? So you have a centralized exchange, you have a number of big central exchanges. You have that with crypto too. They're almost like traditional crypto exchanges. But they're also DeFi as well, which is a very much area of innovation, which are decentralized exchanges where you have automated market makers, liquidity pools. And there are a lot of innovation there, a lot of issues as well, and a lot of risks. And everyone's still trying to figure out how to get this decentralized model up and running. I mean, you can certainly imagine, decentralized derivative products as well on these decentralized exchanges. The other aspect is, I guess, about what types of these products, because there are so many different coins. Is crypto, is it more like an asset class? What is it? Is it more like a currency? Is it more like a commodity? Is it a mixture? What's the best way to model it? And I think the answer is it probably needs its own models. We need some quant work to figure out what the right models are for these things, because every time previously when an asset class has come online, new models have been required. Now, the good thing, our general pattern though, is that at the beginning the margins are quite wide. Okay, the fees are quite large, the margins are quite wide, and your models, they tend to be quite loose. And then as time goes on and the market matures, the models tighten up and they become more mathematically rigorous. The timing, the speed, of execution becomes more and more important. I'm talking derivatives in particular. And so there's like that general maturation of the new market. But there are idiosyncrasies for crypto. Certainly DeFi is a big one, and also regulatory constraints are also a big one as well. In terms of some institutions, are they actually allowed to trade on certain exchanges? Because exchanges have to be regulated, if they're a fund. So the regulatory aspect is huge. So in terms of like innovation to be able to comply with regulatory constraints and yet still partake in the market, that will be quite interesting too.
I think it's really interesting, isn't it? That and there's been this sort of explosion of businesses who are moving into this sort of space. And I mentioned before, we sort of termed it the era of convergence alongside the realization group we work along with, to really make this an unprecedented time, and with unprecedented times come unprecedented opportunity. With opportunity as well, comes risk, and at the moment we've seen huge volatility in the last 5 years or so, and we've seen a real roller coaster around crypto. So whilst I see this sort of beginning of the end sort of line that comes out from a couple of newspapers at the moment, is this the end for crypto? Is this the end for Bitcoin and Ethereum and all that sort of stuff that comes from it? You kind of smirk a little bit, because it's that how many ends of it has it had over the course of the last 5 years or so, but it keeps on coming back stronger and more inevitably over time, which is this sort of classic adoption curve of any of this sort of space. With more headlines even today as we speak, that this will come out in a month from when we talk about. So if we're talking now the 20th of June. With what's happened in the market so far, and you as a startup business, how much has this sort of impacted your strategy? How are you surfing the tide? What's it look like for DeQuantifi?
Well, the looking at it crudely, if you take a step back, I mean, we're providing risk management services, right?
Yeah.
So
well positioned.
It's a good thing for us, right? I mean, if you want to start hedging yourself and protecting yourself against large market movements, then you need to understand where your risks are, right? And so risk management is precisely what you should be looking at. I mean, if you happen to be sitting on lots of crypto, maybe you've been selling NFTs or you've got loads of Ethereum, you're very exposed to the Ethereum price. Okay, so what do you do about it? How do you diversify? How do you hedge yourself? I mean, this is what derivatives are for. Well, one of the main reasons, right, is for insurance and protection and diversification. So it's good for us that this is happening in a way, because it makes people more aware. But it's kind of bad for us because it means they have less money to spend on the services we provide. So I guess the optimum time for us is when the market just starts to pick up again and everyone still remembers how they lost money. They now have money to think about protecting themselves going forward.
That makes a lot of sense. And how does that look? Is that something you see coming soon? What's the if you got your crystal ball out, which is very, very difficult in this space, what's the predictions look like?
I have no prediction.
That's probably a safe place to sit, isn't it?
If you look over last year, there was a huge dip in sort of early Q3 last year. So in July, Bitcoin reached $60K, and then there was a big dip, recovered a bit, and then there was a dip over Christmas. So they seem to last a month or two. And then people, so what I feel tends to happen is people tend to overreact. So generally, when it's going up, the market will go up and probably overshoot where it should be. And when it goes down, it will overshoot where it should be. So there'll be a correction, I think, in the next few weeks.
Yeah. So you're saying get in now?
I'm saying now. Well, I'm personally thinking now is a very good time to buy.
I'm selling my kidney tomorrow. I'm going, and I'll blame it on you if we go down that route.
I was just going to say that the one almost certainty in the crypto space is high volatility. So for sure. So it's a bit of a fool's errand trying to predict what's going to happen, I think. But this is why you want to kind of be, positioning yourself so that you're not, completely exposed to the vagaries of the market. It's just makes sense to start protecting yourself and hedging yourself and protecting your assets.
And I want to add actually that in traditional markets, the times when traders working for institutional traders have generally made money are during periods of volatility.
Absolutely.
So the banks did very well actually at the beginning of COVID, which is counterintuitive, but the market was very volatile.
Yeah, I think that's what really interests me about this. And if you look at crypto as a whole, and this merger of TradFi and DeFi, the TradFi piece comes into it because it's based around models and experience, particularly around some of the derivatives markets where we've seen this before. And if you go in there and look, I look at take this out of a work concept to friends who are really focusing in on it. The ones who are winning are the ones who are taking that approach that both of you have just spoken about. Understanding the volatility, knowing about the exposure and going into it. Where the real problems have been is everyone there. I saw some statistics the other day about how many people between the ages of 20 and 30 have borrowed money to invest into crypto, and it's extraordinary numbers, right? So you've got this enormous movement that's being driven by people who are gamblers, effectively taking punts on things where it seems to be a trend to follow a celebrity who's gone into a place where there's no real structure to it, which in turns in traditional finance means is rub your hands and there's the opportunity, right? Is that a fair assessment of where we sit at the moment?
Yeah, I think there's a core of investors who properly understand the fundamentals behind the currency.
Yeah.
And then on top of that, you've then got people who will follow who don't understand the fundamentals, but they're trend followers. And I think that it's that second category that leads to all the volatility. But strategically, that's why I don't think crypto is going to disappear, because you've got those core of people who do understand the fundamentals, and that's what they're taking a view on.
Yeah, absolutely. So you spoke about the excitement in this of technology within the capital market space, and a man after my own heart in terms of sort of bowing your head a little bit in terms of the sort of speed of digital evolution, which I think has been sort of moved significantly forward over the last couple of years, particularly with cloud adoption and such like. I've spoken to a few people recently talk about this sort of generational sway of decentralized finance, of cloud, and potentially putting ESG into the mix, as well as all three major game-changing things coming together, which puts technology right in the center of it. I learned from my last question about the crystal ball, but tell me a little bit about what we expect to see trend-wise in the marketplace, either from a macro level economically and what impact that has, or from a tech thing. Where are those opportunities that you see right now?
So I've already talked about the movement in crypto markets from retail to institutional. So that's obviously one big trend, and that's one that we are looking to capitalize on as a company. The second one that we absolutely can't ignore is increasing regulation. And that's in the papers at the moment. And we know that this is a government level discussion. So it's been discussed in the EU Parliament over the last few weeks. Regulation of crypto has also been discussed in the US Senate. And I think there are a couple of big issues. So one issue is the environmental impact of mining, which I do think is a really important topic. And I think it's also the environmental impact of mining is somewhat misunderstood. I think I've been involved in many debates myself where it's not understood that there are other models apart from proof of work, which is the one that has an environmental impact. So there's also proof of stake, and it might be new, but I think there's some work in progress to reduce the impact. And I think regulation there may help progress proof of stake more quickly. And there's obviously regulation of stablecoins, and that's become really important after the current issues in the market and with Luna. So regulation is a big topic, but I think regulation is needed. As I worked in, I think what's happened in traditional markets is there's possibly been over-regulation.
Yeah.
But before 2008, there was probably under-regulation. What I see with crypto markets is some regulation is needed to rebuild trust after the current set of events.
I don't think it's even just the current set of events, is it? I mean, trust has been the issue with the crypto world from pretty much day dot. You go back to conversations in the institutions that you guys will have been working at that sort of stage, and 5 years ago it was seen as money laundering and a fad around that. There was no trust in it whatsoever. As that's developed and you've seen people win fortunes overnight and lose fortunes overnight, that only exacerbates more trust issues. So I agree with that. I think that regulation is the piece which makes it a genuinely mainstream asset class, because of the ability there to build widespread trust in something there that is as volatile as it has been. There's not too many other places in history that have captured the public imagination to quite such the same sort of level as there. There's not. People have been moving into crypto like they would have done into William Hill in years gone by. And I think that makes it quite an interesting dynamic in terms of how we deal with this and as a genuinely institutional asset class. I wonder if it will go down that route. I wonder if that's where it does head.
So I think there's a danger, isn't there, which is that it gets over-regulated in the same way that traditional markets have been over-regulated. I mean, I was involved in MiFID, and MiFID, I think it's been so hard and so costly to implement. And then
it sucked the life out of a lot of people, didn't it?
Yeah, and the return, there's a lot of conversations in the marketplace about how useful MiFID actually has been.
Yeah.
And I think MiFID is also, that there's one big issue with over-regulation, which is it reduces the number of players in the market. So it favors very, very large institutions because of the cost of implementing those regulations. So I would hope that the regulators will try and not over-regulate and will apply something that's a bit more light touch, perhaps.
Yeah, and I think that's the sort of early rhetoric that we're hearing out there in the marketplace at the moment. So I love early stage businesses. I've got a big affinity to the sort of startup community, and I've seen many friends and businesses grow up over the last 2 decades that have been in the space and seen some wonderful companies really thrive from it. You guys are in exactly the right space for it at the moment. Fred, I'm going to ask you a little bit more about what the next phase of DeQuantifi looks like. Where do we go for the next 5 years?
Well, we have a roadmap for the company and the product. So as Soheel mentioned, we want to try and bring the traditional tools, the tools of the traditional markets, to the crypto markets. So there are a number of well-established kind of patterns and styles and functions that you can imagine in an institution that wants to gear up to be properly professional for dealing with crypto. So we're looking to provide a suite of tools, software solutions within that space. So it's about supporting that business niche rather than actually developing a particular piece of software. So we're looking to expand in terms of the number of exchanges we cover, the number of different coins and tokens that we handle. We have the whole P&L explain aspect, which we think is quite important, because when you have your coins across many different exchanges, many different products, lots of trades going on, it's quite hard to understand where you're making your money or not. So we've had some interest in providing tools for that aspect in particular. Then there's automated hedging. You can imagine that aspect. So not so much automated trading, but automated hedging. So when you take on positions, you can get hedges automatically put in place. So we'll be looking to get a few more customers, start hiring staff in to look after different aspects of the company, so that we can concentrate on growing the business and spending time on the things we love, which is programming for me, and understanding some of the models and the maths. That would be good, and to try and build try and get into a solid revenue generating business. Then we can sit back and think, do we take this on to another level and start taking on software companies? I used to work for a software company many years ago, so it's always been in the back of my mind to start my own software company.
Look at that.
And go
You
down
heard it
that
here
road.
first.
Or do we partner with someone? Or there's a whole aspect when it matures that you have to start thinking about the accounting side, right? And settlements and all that aspect. So there's a question of partnerships for us as well, and how we do business development so that we can fit in with other companies that provide other solutions that are perhaps not as exciting on the face of it. So that's how I see us.
Yeah, I think that, sorry to interrupt there, I just think that partnership model has been really interesting sort of development over the last few years, as you see more interoperability and people looking at, in the markets of trying to, which is solving, one of the biggest issues of a startup business in, finance, which is the procurement cycle and how easy it is to grow, scale and move up. And that's been a really encouraging aspect of it all, I think. And so the beauty of it is options. I'm going to ask a question to both of you. 6 months in now, 7 months in. Has it been everything you expected? Are you loving it? I think passion's a big part of all this. It looks like the pair of you have found your niche. You're enjoying yourselves, are you?
Yeah. So after doing a social media startup, I have to admit, I'm really happy to go back to something around financial technology. I feel much more at home there. But what I love about this is, as Fred said, it's like going back to the early days of derivatives, where you feel that you're really innovating and working on new things. And I haven't had that since I was 21 or whatever it was.
Yeah.
Time.
Couple of weeks ago.
A couple of weeks ago.
That sounds fantastic. It's a brilliant thing to see, isn't it? And I think when you start to look at all of the scale of opportunity that that exists in this sort of space. When you look at the challenges and the opportunities in it, and you go back to what Fred, you've just been talking about there, about where it can go and what the next sort of phases of growth looks like, and see you sort of really rubbing your hands about some of the the mathematical and technical opportunities and sort of
indeed
come up there. It turns out to be a really interesting thing. So I'm going to ask a question to you both with regards to who should be speaking to you at the moment and who you feel you can help. Who are the sort of people that should be getting in touch, and how should they do that? What's the best route for people to approach you at the moment?
I think probably one of the key things, we're in this phase where we're trialing our products, and we're very customer led. So we really want to build products that our customers love using, and by that I mean end users. So I know that a lot of enterprise grade products are probably perhaps more tailored for, to sell to technology, but we're very, very focused around end users. And that reflects our backgrounds of working on trading floors. So if there are any hedge funds or market makers out there or brokers who would like to try our products for free, we would really like to hear from you. So we'd be very happy to set you up, to take your feedback and work with you to enhance the product to fit your needs. So that's the first question. As to how people get in touch with us, we've got a website, DeQuantifi.com, and we've got our email and we've got a phone number on there. Always very happy to hear from people. Or we've got a LinkedIn page, so you can just search for DeQuantifi on LinkedIn and we'll come up. Or just contact Fred or me directly on LinkedIn. Just message us, and we're happy to be contacted that way too.
You're going to get an interesting conversation, I think, at the end of that call. That's really fantastic. And I love the fact you're talking there about being customer-led. When I look at startups in the space that succeed, they're the ones who are listening to the actual problems of their user base and developing it to it. So when I was really interested in the question I asked you, Fred, earlier on about how this impacts DeQuantifi and where you go as to whether you sort of lurch from one expedient to the next, it's actually pivoting, I think, is part and nature of the last few years, and companies that have been able to adapt and see opportunities and listen to customers and put those into it make for really strong propositions as far as I'm concerned. I've loved finding out a little bit more about all of this. It seems like it's a really exciting phase for it. Anything we can do to help promote, bang the drum and put you in touch with the right people, we'll definitely be doing, because this is exactly the space. I don't think you can be better positioned. I love the backgrounds of both of you. It's that classic sort of convergence, as we've spoken about beforehand, of traditional finance and where it's needed in decentralized at the moment. So I wish you both nothing other than the best of luck. Don't think you're going to need it. I think you're onto something there that sounds like it's absolutely perfectly situated in the right space. But it's been lovely having you on the show. I really appreciate both of your time today.
Thank you, Toby.
Thank you.
Absolute pleasure, and we will see you soon. And thanks a lot to everyone for listening in. Please do get in touch with the guys. We will put some links alongside this as well. And we look forward to seeing you on another episode of FinTech Focus TV. Thank you very much.